This is Justin with storycorneroptions. We're back at the four-way chart. I went a little crazy on yesterday's video with a bigger dive into the options, looking at every $5. Today we're going to look at every $10 strike and look at things a little bit differently. But let's start here, see how things moved. So on the daily on SPX, we had kind of a nice selling day. To zoom in on this a little bit more. So yesterday we were at a resistance or nearing a resistance. And then today it looks like we had a very small gap down. Very small. Wow. Right below. Wow. Okay. So yesterday's low was 4164.12. And today's open was 4164.10. So we gapped below yesterday's low by 2 cents. And that's a bearish gap and go in my book. Very, very small. That's crazy that it opened right there. What's really nuts about SPX is it doesn't trade pre-market after hours. So you don't get any candles in between, yesterday's close and today's open. And so what I usually do is I look at SPY to see, okay, where are we actually at? And then you can also look at the options because the options have pre-market, post-market trading. Obviously, the same-day expiration don't trade after hours, but the ones that are expiring that day do have pre-market trading. So anyway, you wouldn't really see a gap down until it actually opens. In this case, a 2 cent gap down, you would have to see it, on this very first opening candle, the first, seconds of the market open, as quick as your broker can update things, or your charting software can update things. So we got a really strong opening candle sideways for a little bit here. This is a really nice stair step through here, and then just starts to go down. I really like that there were 2 bull candles here. So some bulls trying to come in. 2 in a row is really great because you know that they're going to be trapped. It was the 3rd bull candle of the day, and then it just started to go. And if you didn't get in somewhere in here, and I didn't really look at the market much today, other than saying, oh, we're selling up. Oh, we're still selling up. Oh, are we recovering? What are we doing down here? And it was just not a good day for me to be involved in the markets. I was tied up in meetings all day. Anyway, great day to be selling, great day to be in puts. And we did end up just, let's draw it in. So we put in this quick sell, then a stair step, a waterfall down, did some kind of like double bottom shape in here. I can draw that better. So like a neckline maybe. Really nice hammer there, and really just recovered. Didn't measure this. 41.25 from 41.90. It looks like we did maybe a 50% retracement of this. Yeah, I think it's kind of a 50% retracement to there, but not the high. So something like that. I don't know, just kind of roughing it in. And then we took out the high there with this last gasp of bullishness. And I thought for sure this is a really nice reversal. We're going to just go roll back down. Nope, we just that was enough selling for the day. So we pretty much ended the day. The last hour or so was pretty sideways. Really hard to do a directional move there. But let's go look at something. So because we moved through so many strikes, I don't want to look at every $5. There's not really a great, like, we could dive into one little portion of a day and kind of see how that went, but we'll get to that. But a really nice way of looking at this, and I'm going to bring in my all the different options like I did yesterday. Hope this doesn't scare people off. So right now I've got the calls on top and the puts on the bottom for the same strike. So I have 4100 top and bottom. So call, put, 4110, call, put, 4120, 4130, 4140, 4150. Okay, so it just gives you a good idea of kind of like, okay, where do this was kind of like the middle of where we went today, or maybe not exactly the middle, but a good range of where we went today looking at these strikes. So actually it was kind of the middle. Now that I think about it. So first thing I noticed when I was doing this, it takes a little bit to get this set up. I wish there was a automated way, and there probably is some kind of automated way to do this, but I had to actually go in, make sure the chart was set up, zoomed in just right. And as I was doing this, I'm like, oh, look, my cursor's kind of bouncing around. So if I move my cursor around in the top left window for 4100, you'll see on all the put windows, you can see where the cursor is. It's moving up and down, right? So let's see if I can draw. Let me do this. Let me see if I can draw the drawing tool. Nope, can't use the drawing tool. I'm trying to point to something. I want to point to something, and I'm in the middle of a pinhead. Give me just a sec here. Can I? As soon as I turn the drawing tool, I can't draw something with the cursor. So I have to, okay, let me kind of get this lined up in a certain place on the chart. And then see if I can remember. No, okay, so all right, so on the bottom, this is an easy way to look at it. On the bottom where I've got the cursor, oops, no, I moved it. Where I've got the cursor is for all the puts is right around $15. 15 is the price. It's 14. Okay. Just 115. Okay, 1492. That's a good number. 1492. And if you just thought of Columbus, so did I. So 1492 on all of the charts on the bottom, that's the price. You can see the different options. Okay, the 4100, the put, the 1492 is really right at those peaks, right? On the 4110, that put, 1492 is kind of midway back down from the peaks into like the head, I'm gonna say head and shoulders. It's not really head and shoulders. It's more of like a double top, but we're still above the neckline. Okay. Then the 4120, we're below the neckline of the double top, the double top there. On the 4130 put, we're much lower. We're way down near kind of a pivot, or higher than the pivot. On the 4140, we're below that pivot. And then on the 4150, we're way below all of those end of day prices. We're way back down into the range from earlier on in the day. So the 1492, and I can go over to it here. The 1492 was right in here, like as we're running up. And it just shows you, okay, well, obviously the put, because we went so far down, we went into, the 4,000s. Because we went so far down, we're in the money by quite a bit. And so the 1492 price is going to be, a long time ago from where we got all the way up to around, 56 or 58. I think it's 56. And then we ended up closing in the money. So here's a good way to look at this. We closed at about 4120, a little bit below 4120. So all of these puts are in the money, which means they've got intrinsic value. These were out of the money. And then these calls were in the money. This one was ever so slightly out of the money, out of the money, out of the money, out of the money. Okay. So the ones that are out of the money at the end of the day, and that's what we're talking about, the end of the day, the closing price, these all ended up at zero, about zero. Technically zero. And then all the ones in the money were worth some amount of money. Unfortunately, the 4120 was in the money by like 32 cents or something. So it didn't actually end up with much value. It does have the low price here, which, that's not the close price. That's just the low, and it's right at the end of the day. So it kind of looks like this one that was out of the money, and that one says 0.05 also. But anyway, this is kind of a good way to look at, okay, where we actually at. But this is what I love about options, is there's opportunities for this to go so much further up, so much further down where you can get it really inexpensively and then have it go way up and make money. But how would you have known? First of all, I guess the question is, how would you have known today's going to be a selling day, get in bearish as soon as you can, and then what strike, and not all the strikes are here, but there's some good ones here to look at. We started the day at, was it 42.64.10? So we started the day with all the puts out of the money. Okay. So like the open price was out of the money on all of these, right? This open price was in the money. I don't even have the top, I don't even have the open price on the chart. It's way up here somewhere. Same with this one, way up here. This one, I think I have my tool in the way. Yeah, so we're way above that, way above all these. Here's, you can see it on the chart. It's just because if I was zoomed in. So these are all out of the money. I'm sorry, these are all in the money. That's why they're so expensive up here. Okay, so these are all in the money. I didn't mean to bring them. No, I was just circling. All of the calls are in the money. All the puts are out of the money. You can see the complete shift as we sold off, that all of these calls went out of the money, but they didn't all go to zero. So the low here was 510, the low here was 280, the low here was something else and something else, and really inexpensive. This is when it's around like 5 to 10 cents, a contract. This is when they get crazy wicky like this, because every transaction is just stretching that candle from the 5 cent to 10 cent, that kind of thing. So that's usually how you can just kind of read where the chart is at. Okay, so clear all that. What I wanted to look at was we can dive into how to pick an option, and we'll get into all that, but let me just revisit what I talked about yesterday, because these candles, we're getting into some really good ranges. The 41.20 call here, the low is around 130, the 130s in here, and then the 41.30 call, the low is around like 0.5, 0.6 on this pivot. So this first pivot is like, oh, between these two values, there's a dollar price we probably got close to. So let's go look at the 41.25 call, and that's the one I had back over here. So I have this set up. So go look at right here, 41.25, and I got to zoom into it because it opened way in the money, and it's really hard to see the prices down here when we can just ignore all that. Okay, look at this bounce. Look at this hammer right off the dollar price. Okay, the low is 0.82. So, but look at this. We tagged a dollar a number of times right through here, came right back to it almost right here. And so this was absolutely a candidate for, okay, if I can get down to like 0.25, 0.3, 0.35, something like that, like that's a good price, just because it's following this row where it bounced nicely off the dollar. Okay, so as crazy as it sounds, we actually did come back down to that price right here, late in the day. The low on this candle was 0.25. Now, you literally have 4 candles left for the day on the 3-minute chart. I've been looking at all 3-minute charts. So you're not going to really set a huge target if you're going to take this at all. And I would still be cautious about taking this. I would just be like, well, it fits. It hit a dollar way back over here, and it bounced, and it stayed above it all day, but like it still follows the rule where it kind of comes back down to this price later. It just doesn't fit all the other criteria with like, oh, what's the stock doing over here? And again, we're looking at a call. So like we've been down so far. What are we really going to do? We actually rallied, like we were down back on the 5-minute here. And sorry, just checking something on my phone because I thought I was going to hit the alarm. Okay, so we sold off all of this, and then we actually spent the rest of the day recovering and retesting, and even this, that's kind of like the last chance for any sort of bullishness. Like we ended up recovering. This move was nice, this move was nice. So it's like, okay, where could we have had the right option price? Going bullish, because we bounced here. This is the reversal direction is bullish, as opposed to yesterday where the reversal direction was going bearish when we were rolling over like that. So that's what I'm saying. As crazy as it sounds, like we had the right price on the 41.25 call. We were near enough to it that had we gotten in the money with a few minutes left in the day, 10 minutes left in the day, 12 minutes left in the day, it actually could have closed in the money and made some money. So if we come back into this, um, it's possible to have bought at, let's say, zero point 0.4, just for comfortable numbers. 0.4 entry, 0.15 stop. I wouldn't recommend having the stop. I would go with a little bit cheaper option price, maybe going with 0.3 and no stop. That way you can still exit at the end of the day for 0.05 if it doesn't work. Or I mean, in the last 5 minutes, 6 minutes of the market, just get out for 0.05 or see if you can get out for something a little bit more, and then just have that order sitting out there for the last 3 minutes a day. And most of the time you'll get a fill, depending on your broker. I've been doing this stuff with TD Ameritrade using the Thinkorswim platform that I'm showing right now. And most of the time I can get out for 5 cents, 0.05 at the end of the day. But I don't think so. Yesterday we talked about a target, getting into a trade like this, like looking for 0.3, 0.35, something like that as your entry, and then looking at your target of 1.5. You're not going to look for a 1.5 target when there's literally 10 minutes, 12 minutes left in the day. You're not going to hit it. Most likely you're not going to hit it, or there's not enough time excuse me, to hit it today. In that last 10 minutes, it can happen. It's very unlikely, unless there's some key thing happening momentum wise. And this day just didn't really have that strength. But this is why if you buy small, you might be able to just kind of leave it out there and accept the fact that, well, I'm going to risk that R, and it's at the end of the day, and I have to be okay with losing that full amount, even not getting back 0.05. So this is probably one, and I didn't take this trade. Didn't see it until I was setting this up for the video. But if I had bought, let's say I bought at 0.4, even getting out at 0.5, maybe 0.6 would have been a win. I mean, it's a gain, but all you're looking for is a little bit of a tick up in the move here. And this came up to 41.24.20, like 80 cents away from at the money. Like literally, this is the at the money strike. The 41.25 strike is right here, but we didn't get through it like we did in this candle. And so, this is the kind of thing, it's like, this late in the day, is it really worth going bullish? Do we have any bullish strength? That would be my hesitation whenever something like this comes up. But it fit the setup, and it would have worked with a smaller target in this case. There's, like I said, there's other things we could look at with how things move today, but I thought this would be kind of an easier thing to look at in terms of like how this trade could have worked in a different direction, or how the setup is really clean. And when I find it, I've found it working. You just have to know, okay, when are the times to look for that bigger gain, when it's earlier in the day. And if it's late in the day, either don't even take the trade, or be ready to just get out for any small gain. And then it's the question of, again, is it worth even a full risk amount, or whatever fractional R you're using? Like I'm doing usually like a quarter R on this stuff. Is it even worth setting that up? Can I get a quarter R back? Can I get something back? Are you going to double the option? Maybe. You're buying it so inexpensively. So if you bought at 0.4, going for 0.8, maybe that would have worked. That was, so it worked on this very next candle. So if you got in at 0.4 on this candle, and then it went up through 0.8 and went even further, you're going to be kicking yourself like, oh, I should have held a little bit longer. Should have my target at 1. Like, just accept the fact that you made a gain in like 3 minutes within a couple of candles, and you're at the end of the day. And this is the most challenging time for options, because it's more so a gamble unless you're seeing things like this really set up and you have study this yourself. Like, I'm just pointing out the things that I'm noticing, but I didn't take this trade today. I was actually looking for this to roll back down a little bit. I thought this was like a last gasp kind of thing. I thought we weren't going to have any more bullishness. We were going to really just roll right back down. So I was getting in bearish over here with something very small, and it ended up not working. I mean, we went down a little bit, but the option never got anywhere close to making a profit. It just kept selling off, but I was still able to get out at 0.05 right at the end of the day. So I was only in that. I was in that from, I think, one of these candles. I think I either got filled on this candle or the next one here, one of these candles. So I was only in this for the last 40, 50 minutes of the day, maybe. And I wasn't holding right into the close. I set my target at 0.05 to just get out for something, and I was able to get out. So I risked, I bought 0.15 and I got out at 0.05, and I got 2 contracts. So literally $20 to see, well, can I make a little bit more? Can I double that? Can I, and it's like, I'm looking for this to reverse. I'm looking for, I liked that there was a pivot here and we took that out, and I thought, okay, this is where the bears are going to come in. We're going to make this a bull trap, because I mean, look at what we've done. Are we really going to recover that much more from this point? I just thought we'd roll over, and this is where options will fail you, is when they just go sideways, the premium all disappears, and the market maker is the one who win. A lot of times they win anyway. But after this much selling and this much recovery, that's a typical thing to happen. Just going sideways the rest of the day. That happens a lot more than you realize, because markets can only go up, down, or sideways. And if they're tired of going up and down, they're just going to go sideways. Or if we can't figure out, okay, where are we really going from here? People are waiting for the next thing, and there's some big things happening tomorrow. Rate announcements, some FOMC things. So be cautious with SPX in the morning. Options will be extremely expensive. There will be opportunities. It's going to be an interesting thing to talk through that tomorrow. I'll plan on doing another one of these tomorrow. Getting back in the rhythm of this, trying to make them a little shorter, trying to make sense of this, but just want to talk through what I'm seeing. I hope that helps. Please hit the like, subscribe if it's the first time you're seeing this stuff. And yeah, let me know if I can explain things a little differently, a little better, something like that. But we're really setting up on a daily here for some sort of bigger pullback. This isn't Evening Star reversal. It's a bearish gap and go. The last time we had the bearish gap and go was this candle, and we ended up taking it out a couple days later. Actually, 2 days later, we made this bull candle and took out that high. Here we are 2 days after, another bull candle here. We've now taken out that low with a bearish gap and go. So we've had a lot of indecision in here. We're range bound in the same range. I'm gonna zoom in on this in the daily here. Where I have these kind of orangish lines is this bear candle right here. So the high, or the open here, and the close here. We're in this range. We've been in this range really through here the last like 3 weeks, actually most of April. We've pushed through a tiny bit here and bounced. I thought we were going to get a little more selling, and we ended up gapping up the next day, so that didn't happen. We were only in this range through here, made kind of like a double top sort of shape back in February. And so here we are back in this range. We've been in this range longer. We've consolidated much more. We've had some bull strength. It's entirely possible to move back up. I got a TTM squeeze down here. That's turning. It's got a couple red dots here. That means that there is plenty of compression. We can have a bigger move soon, very soon. We did that back here. We had 5 red dots in a row with the TTM squeeze. As it was breaking out, it had a bigger pullback and then rallied quite a bit more. So we could do something similar to this, where we're range bound. It looks like we're breaking out. Could we have a bigger pullback because of some rain announcement this week? Could we make a few more dots in the next few days as we pull back? Maybe. It depends on where the Bollinger Bands and Keltner channel are. That's what defined the red dots. And then could we, let's say we pull all the way back to like 4,000 here, and that's this same move. So what I'm seeing is like, or what I'm suggesting is maybe this move here is something like what we could do here. I gotta shrink that down quite a bit. So maybe that's something like this. Or are we doing something like this, where we're pulling back Actually, it's bigger. It's like this. Ooh, that fit really good. That's interesting. I kind of like the shape. I've not fit anything to this before. It's interesting. That fits really nicely. We've got an extra pushback up here, but it coming back into the long-term moving averages and then get going. I can see that. All right. I'll have to look at that some more. Hope this helps. This is Justin. Thanks.